Well, welcome everyone to tonight's asset protection webinar. We are so delighted to have Clint Coons, our friend and associate with senior partner with Anderson Business Advisors, to talk about asset protection and tax tips for the stock market investors. And before we do, let me kind of summarize just a couple quick little announcements. I won't take a lot of Clint's time, but we do want to go over a couple things. We do have coming up in 2 weeks, our Dallas 3-day asset protection class. It's a Thursday, Friday, Saturday event in September. And the cutoff date for the room block was today. I was on the phone with them extensively at the DoubleTree Arlington DFW South. We got an incredible room rate, and they agreed to extend it up until Saturday. So if you haven't booked your room and you want that discounted room rate, you have to do it before Saturday, Central Time, midnight. And after that, then the room rates go up to whatever the market value will support. So if you're coming to Dallas, please book your rooms this week as soon as possible. Now, when I say that you've got until Saturday, it's also based on availability. Now that our room block has technically expired, if the rooms are full, then you won't be staying with us at the DoubleTree. And they're long days. We want you to stay at the venue hotel if possible. If you can't make Dallas, please come see us in Las Vegas. But by the time Vegas comes, if you're interested in tax tips and tax reduction, the year is pretty much over by November. We'd like it to get you as soon as possible into the tax year. So hopefully a lot of you we will see in September, and this is where we're bringing in really some of the best trainers and attorneys in the nation. Clint will be there, as well as several representatives from Anderson Business Advisors. If you're interested in an agenda, the official one has not yet been posted. Again, I was on the phone with the hotel, and there's a lot of changes, and so we're moving agenda items around. Everything's not confirmed, but a very good sample is on our website. And we're going to shift a speaker here or there, but hopefully by the end of the week we'll have that posted. And before we go into any tax or legal, there's always going to be a legal disclaimer, and that is what we teach from a stage or a webinar setting, general principles, how they apply to you. That's really a discussion for you and your attorney, your advisor, which is why we structure the summits the way that we do. So we teach from stage and give you a chance to sit down with the attorneys, the presenters, the consultants that are there. We want this to be not just in theory. We want to be able to bridge that gap and say, yep, these principles apply to you. And so anyway, the principles are what they are, and we don't want to make our earnings claims or give tax or legal advice. So with that, I'm excited about this. Clint, we are so delighted to have him. He's one of the brightest, most cutting edge attorneys in the nation on asset protection. I've worked with him for almost 20 years now, Clint. It's coming up on our 20-year mark. And I don't know anybody in this industry that I respect more. So we appreciate his time. We appreciate you being on the webinar tonight, learning how to reduce your taxes and do asset protection for stock market investors. So with that, Clint, I'm going to turn the time over to you, and we'll let Clint teach for a little while and then open it up to Q&A. All right, Clint, you're on. Thanks.
Great. Thanks for the kind words and reminding me how old I am, Don. I appreciate that. So there we go. All right. Yeah. Well, welcome everyone. Tonight we're going to talk about tax and asset protection planning for stock traders. If you're on before we formally got started here, Don and I were discussing that I am a trader. I used to trade quite extensively before I even graduated from law school, because my wife, Tracy, told me that as soon as I graduated and I passed the bar, she was quitting and I had to have a house for her because we had our son when I was in my third year of law school. Well, that poses the dilemma because when you're in law school, you're not making a ton of money. So I needed to come up with a down payment. And the way I did it was through trading. So when I had graduated law school for 3 months, while I was studying for the bar, I was actively trading and I made that first down payment so I could meet my wife's requirements. So I know you can make money in the stock market. I've worked with stock traders for over 20 years. And something that I've seen with stock traders when it comes to planning is that there are many ways to put things together, but a lot of them do not know the various ways you can actually structure your trading and the importance of putting together a plan for the trading. I mean, all of us just know that we can go and open up a brokerage account with Charles Schwab or some other broker, and we can start trading through that account, but it doesn't necessarily mean that's the best solution for us because a lot of things can happen. And the way I look at it is that with anything, trading or any other types of investing, think of it as a three-legged stool. You need to focus on asset protection, you need to focus on taxation, and you need to focus on business planning. And all three of these need to work together. And if you're not, then one of those could work well for you, but you're really missing out on two other aspects of the stool that can help propel that or move that ball down the field. I don't know what your personal end zone is, where you want to be from your trading, but entities can help you get there quicker if you set yourself up the right way and make sure that you're taking advantage of all three legs and paying attention to those while you're creating your trading structure. And the way I always like to refer to it, is, what is your story? Why are you getting involved in trading? For some of us, it is you want to generate extra income. Maybe you want to have a better retirement. I know a lot of people tell me they're trading because they want to pay for college for their children or possibly be able to travel more and have some more leisure time. In my particular case, for my investing, is that I want to create a legacy of wealth for my future generations, our children, and then their children and so forth. And so all these are really important. But the question is that how are you going to get there? Are there going to be things that stand in your way that will prevent you from reaching your goal? And so when it comes to writing your story, that is where you want to be. For many people, when I sit down with them, I know exactly where they're going to be. If they have not structured themselves properly, I can pretty much predict, the roadblocks that they're going to run into along the way. And I don't want to see that happen to you. And so that tonight what we're going to cover is the three-legged stool. We're going to talk about the three aspects of trading and why you need to focus on asset protection, tax planning, and business planning so you can get more out of what it is that you're doing right now. So let's just talk about lawsuits. If you ignore the threats, you do so at your peril. This is a very litigious society. Over 40 million lawsuits are filed on an annual basis. We have more attorneys in this country than any other continent. There's more attorneys in California alone than any other industrialized country. And so this perpetuates the problem. You have so many people out there looking to generate business, and the way you do that is through filing lawsuits. And so you're put at risk. When you think about lawsuits, you're going to be held accountable even for the most innocent of mistakes. And the thing is, if you're involved in a lawsuit, your trading account is now put at risk. The money that you're holding for retirement, for that legacy of wealth, for that extra income, for that college education, all that can be taken away because your brokerage account is not protected from potential creditors. So what we want to do is take our brokerage account and make sure that we get it out or beyond the reach of our creditors, because so many things can happen in life that your financial situation can be turned upside down. You can go from having, a sizable brokerage account, a personal residence, a great marriage, great family, to having that all wiped out with one horrible lawsuit. People don't appreciate what lawsuits can do to you. And the reason why this ends up occurring many times is because these individuals have not structured themselves properly. So what are some threats that you face to your brokerage account? How could you find yourself in a lawsuit? Well, number one is personal injury, right? That's a simple one. You can all grasp that when you get in a car and you're driving down the street, you can be involved in a car accident. Now, we can appreciate, I imagine, that if we do something wrong, we hurt someone, like one of my clients that I've been working with for years, they were bankrupt over something their son did. Their son went off to Arizona State University, had a car, was there 2 weeks, hit someone in a crosswalk because he wasn't paying attention, made that person a paraplegic, and then they were sued into bankruptcy as a result of it. So they lost all their retirements. They could no longer afford to send their child to college. They lost their personal residence. It almost destroyed their marriage. Just think, you have to tell your children that you can no longer send them to college because you no longer have assets and the ability to do it. None of their assets were protected. Everything they owned was in their own name. So that's an example of where someone was seriously hurt, and we can appreciate the fact that we need to compensate someone when we've hurt them in that manner. But the problem we face in this society is that there are profiteers out there. There are attorneys that it doesn't matter if anyone's hurt. They'll still sue you for the most minor of infractions, and then you will be held accountable for that. Here's a letter that I received from one of my clients. It's his testimonial and horror story. And it's someone that we're working with now that has been through this process. In 1992, he rear-ended another car at an intersection in Boston. And the thing is, they were both stopped at the stoplight, and the light turned green, and he moved forward and just lightly tapped the rear bumper of this car. The driver, of course, said he was fine. There was no problems. There wasn't even a policeman called to the scene. They drove off after they exchanged some information. Well, this individual had his own business, and he's running his business, didn't think anything of it, and a month later he gets served by a personal injury attorney, which happens to be the sister of the individual he tapped, the rear bumper he tapped. They're seeking $1.2 million in damages. So this case starts up in 92. Well, for 5 years, this is hanging over his head. And finally, he realizes, you know what, I got to try to move on with my life, let my attorneys deal with this. And so he buys a commercial property at auction. And so he starts accumulating assets, because he told me that his life went on hold for these 5 years, and he knew that he could no longer continue. He had to start moving forwards. And then in 97, this thing went to trial. And what's so disturbing is that he found out that the person he hit, this individual and his sister, they were suing 7 other individuals as a result of motor vehicle accidents. And the attorney had told him that they'd hit the mother lode with this person that I now represent. And so in 99, because of that lawsuit and incurring over $90,000 in legal fees, he had to file for bankruptcy. He lost everything, destroyed his credit. And so he now was in this situation where he had to start over. And you fast forward to 2019, he has rebuilt his life, but now what he's doing is putting his assets in entities to protect them. So as a trader, you don't want to leave that brokerage account exposed, because a creditor could come in and they could definitely take that asset from you from the most minor of infractions like this. I often tell people, ignorance of the law, minor mistakes, that still is not going to protect you from being sued. If you're a real estate investor, all right, and you say you have one rental property, well, your tenants can create liability for you as well. I just recently talked to an individual who told me that her property, she had rented it out to someone, and a person came by and stole a dog. So they had a kennel set up with 4 dogs in it. This person came and they stole one of the dogs out of the kennel, and they were driving around with the dog, and the dog bit them. So they dropped the dog off and on the street. They end up getting the dog back, and the person that got bit is now suing the owner of this property. I mean, what type of topsy-turvy world do we live in now, where someone who steals your dog can turn around and sue you because they got bit by the dog that they were stealing? And on top of that, she's now lost insurance on her property because she lives in a no-bite state, which means if you allow someone to live in your property that has a dog, then you can't have insurance if you can show that the dog has bit someone. So this just compounds the problem. If you have tenants in the property, another issue you face with rental real estate that can bring liability back to you, which would then jeopardize any monies you have in a brokerage account that's in your own name, would be toxic mold. Here's a letter one of our clients received. This is going back to 2004. It's in Texas. And as you'll see, this letter states that the tenant is moving out. They hired an attorney. They're moving out because they found black mold in the property. And this black mold has created problems for the tenant and her son. And as a result of it, she's also 5 months pregnant. And the doctor said, you may have issues here. So not only are they asking for their deposit back, they're getting out of their lease early. They also told my client that they are going to be bringing a lawsuit against them. And I'm sure you want to contact your insurance company as soon as possible, give them notice of this claim, and we're willing to discuss the possibility of settlement, and therefore give you 21 days to respond before we take any further legal action. So this was a letter that a client of ours received by a tenant who was asserting that they had a property in which there was black mold and has created respiratory issues for them. And the thing about it is their insurance company, even if you notify your insurance company, it's not going to help you because they will not cover you, because black mold is an environmental contamination and those are excluded under policies. So, when you own other assets, they also create liability or jeopardy for your brokerage account. So you want to make sure you're protecting it from all matters of potential lawsuits. Failed contracts. So every time you enter into an agreement with someone, there's potential liability there that you can be sued. People do not realize many times that a loan is a contract. When you borrow money from someone, and if for some reason you can't repay that loan, maybe you lose your job, maybe you're injured in an accident and you can no longer work. Well, those loans, if you can't pay them, then the lender's going to come after you. And any assets you hold in your own name, such as your brokerage account, that can be taken and recovered by your lender to satisfy the judgment. Just entering into an agreement to buy a piece of property and then backing out of it. There's another example of how you can be sued. Here's a letter one of our clients received this year from an attorney, a law firm that's threatening a lawsuit over the fact that this individual could not close on the property. Actually, I said client, she's not a client, but what had happened is that she'd entered into an agreement to buy a piece of property, couldn't come up with the money to close, so she walked away from the deal. The seller kept the earnest money, and now they're turning around and suing her for the difference in the property value because they took the property off the market and the property went down in value from the time in which they originally entered into the purchase and sale agreement with this individual to the time in which she backed out of the purchase and sale agreement. So you can very easily see here that lots of liability based upon the things we do in our everyday life. If you have children, there's another example that you have of where liability exists. For example, there was a case I worked on when I was in law school where this individual, they went out of town and their son had a party and he had a bunch of friends over, a bunch of teenagers, and they were going to be drinking. They were staying in the guest house, so the son took all the keys from everyone so no one could drive drunk, and tried to hide them. Well, about 2 o'clock in the morning, one of the kids found the keys, grabbed a set of keys out, got his girlfriend and said they were leaving, jumped in a car that they did not own, and drove down the street about 1.5 miles, hit a tree, and both of them were killed. And so it's a very tragic story, but it's something that can just happen in the blink of an eye. We happen to represent the owner of the vehicle because there were lawsuits flying all over the place. And the owner of the vehicle, they were being sued because that was the car that the child or the teenager drove that ended up killing himself and his passenger, which was his girlfriend. So kids create liability for us as well. And we want to make sure that we're protecting our brokerage accounts and our assets from these various forms. And I can go on and on about the various forms of liability. And the reason why it's so important is that if a creditor sues you, here's just some of the things that they could do with that judgment they obtained against you. They could levy on your assets and bring the sheriff in and start selling all of your personal assets. They could garnish your brokerage account or bank account. That's the easiest way to go. For most attorneys, all they need to do is if they get a judgment against you, they then file a writ of garnishment on your bank account, your brokerage account, anything that's in your own name. And then those assets will be held for your creditor. They can file a lien on your personal residence. If you have a business, they can foreclose on your business interests. So as traders, we do not want to take an account that we're looking to use for income, for retirement, to build a legacy of wealth, to pay for our child's education, and keep it in our name because it is then being put at risk unnecessarily. And I know you might be thinking, well, I have plenty of insurance and that's going to protect me. Listen, insurance companies are not in the business of paying out on claims. I I talk to people every year who tell me the same thing over and over again, that they thought they had insurance, and it turns out that they weren't covered for the claim that was brought against them. They thought they had insurance, but they didn't have enough for the amount of judgment that was awarded against them. So what you need to do then with your brokerage account is put together a structure that protects it from your creditors. And so what we do for traders is we'll typically create a limited liability company and put your brokerage account into the LLC. And the reason we like to use an LLC is that it offers protection from your personal creditors through what we call charging order protection. So you want to make sure that when you're creating this LLC, you're setting it up in a state that has strong charging order protections. And what we mean by that is that if you get sued, a creditor cannot take your LLC from you. They cannot force you to distribute your brokerage account to you. They can't force you to liquidate the company and shut it down. The only thing they can do is wait until you decide to take a distribution, which you're never going to do because you're in control of that structure. So you want to make sure that you have put yourself in a place where your brokerage account in a place, your savings account can go in there. So if something were to happen, like I just described, they cannot get after those assets. So dealing with that three-legged stool, the first leg, lawsuits, asset protection. The way you go about addressing that for your brokerage account is to use a limited liability company. I myself have an LLC that offers strong charging order protections that is set up to hold. I have 2 brokerage accounts in there and my savings account to keep them protected from my creditors. Now, the next thing you want to look at if you're a trader would be tax strategies. You want to make sure that you're looking to reduce your taxes to the greatest extent as possible. Because who doesn't want to make gobs of tax-free money if it's available, if you know how to go out there and discover that. So when it comes to traders, what we need to do then is once we've set up their account inside of a limited liability company is to then create a structure around that, an entity that they can then utilize to make their trades, which will allow them to take deductions. And so if you did it on your own, you're not going to be able to write off a lot of expenses against your trading income. Many of us have expenses that your local CPA will tell you are non-deductible. Well, that's just because of the way they look at things. They look at things from the individual standpoint. They're not thinking of it in terms of creating a trading business. And so tax strategies and business planning, they really go hand in hand when we're talking about dealing with traders. There's many people that we start working with have education expenses that they incur to learn about trading, which is a smart way to go about it, not trying to do it on your own, because so many people try to learn trading on their own only to figure out once the market turns, they take an immediate hit on their account. And it's more expensive to go about it that way than it is to pay someone to teach me how to trade. And so being able to write that expense off, that investment you're making in yourself is so very important. Well, if you're creating the structure the right way, then you'll find ways to deduct that expense. So when you're writing these things off and you're setting up the appropriate structure, all you're doing is finding money that you're going to be paying to the IRS, but rather than paying it to the IRS, you're paying it back to yourself. You're putting that money back into your pocket. And so if you know how to create the correct structure around your trading, the way you're setting it up, then you're going to find that expenses right now you're probably not deducting or didn't think you could deduct will become deductible. And here's an example of just some of the deductions you'll have when you set up the appropriate structure. And what we like to do is use a C corporation. I like to have C corporations in place to handle all of these expenses. My C corporation generates money from my trading activity. And then from those money that I'm generating from the trading activity, I'm going to turn around and start paying for these various expenses. So you have tax advice, subscription to financial magazines, newspapers, traders guides, custodial fees, seminars, ongoing education. You can see here, there's quite a few things that as an investor, you're not going to be able to deduct. So what you're doing then by creating a corporation is you're creating a structure around your investing. That is, you're utilizing entities in a way that most people have not yet or don't understand what they can do to A, protect themselves, and B, at the same time, pick up tax deductions. There's so many people out there that when it comes to trading, they've talked to people, maybe their CPA tells them set up an LLC like I described, but they miss the tax component. So really understanding how a corporation and LLC work together is crucial for the traders. It's a strategy that we've been using for 20 years. And it's understanding that entity planning is about creating a business around your trading. So many people just go out there, as I stated, they create the one entity, and I call it a one-size-fits-all approach. And they get that one LLC set up and they think they're good, but they're missing two other legs of that stool. So what you want to do is, as I stated, create that corporation and then have it manage your limited liability company. So what we do for traders is we create a C Corp, and that C Corp then is going to be set up, and it can be set up in your state, or we're typically going to choose a state that has low or no taxes. And then the C Corporation itself, you're going to be an officer employee of that company. You're then going to have your LLC set up to hold your brokerage account. And that LLC that holds your brokerage account is where all the trading is going to take place. But for most people who just stop at asset protection, they'll be trading that brokerage account as a manager of the LLC. Well, if you want to create a trading business to be able to write off many of the expenses that you have right now that are non-deductible, then you're going to take your C Corporation that you're an employee of, and you're going to start charging your LLC a management fee to make the trades on behalf of that company. So you have two separate boxes. So you, as an officer of that company, it's your role to effectively manage the limited liability company. It's no different than if you set up an LLC and you hired Mike Koval or Stacy Acevedo to trade your account. They're not going to do it for free. They're going to require that you pay them a fee to engage in that activity. So rather than pay a third party, since we're taking the time, making the investment in ourselves to learn how to trade, why don't you pay yourself to trade your own account? And this is what we call trading as a business. We started doing this strategy, utilizing this strategy in '99 for our clients as we started working with those that were investing in the stock market. And what we're able to do for them is start picking up all those deductions that I just showed you on their tax return because they were running them through the corporation. So for example, your corporation makes $10,000 in fees. If you have $10,000 in expenses, then you have zero taxable income versus a lot of people who trade in their own name, or they just set up an LLC to protect their brokerage account. Those same $10,000 in expenses are non-deductible to them. So they're basically, you're giving away $3,000 a year to the IRS in that example by not having a proper trading business structure that is wrapped around the activity that you're engaging in. So why does this happen? How do people end up there? Well, many times it's, you get your advice from friends, people that are engaging in trading, and they themselves do not know how to set up the structure this way. Or you go out and you do it on your own by using LegalZoom, or I like to refer to it as Legal Doom, to create your structures. Then the problem you can have with that, if you get audited or you're involved in a situation where it's a lawsuit, the documents may not protect you because the entities were not set up the proper way. For most of it, it's just you're not aware of your options. That you didn't know that if you create a C Corporation and you charged a management fee to your LLC, and if many of you may have more than one LLC in your structures, that you have rental property. So there's another source of income you have that you can pick up more money and then find a way to expense it out. Or maybe you don't need to expense it out. Maybe you're in a high tax state, such as California, where between an individual rate and the federal rate and the state rate, you're paying over 50% in taxes. Well, if you have a C Corporation set up and you're trading, you're generating income through there, then your tax rate will be at a flat 21% on that income. You can basically cut your taxes in half by having a C Corporation working for you in your trading structure. And then a lot of reasons people just get bad advice, because their professionals do not understand how to create these structures in this way, because they're not traders and they do not have trader clients. 1/3 of the clients that we have at Anderson are traders, people who actively trade in the stock market. So we have both legal and tax inside of Anderson, and so we work with these people on an annual basis, so we see what they're doing in their accounts, and we've structured them in a way like I just described with the corporation and LLC, so they can start picking up on these deductions. And so when it comes to entity planning, I always like to tell people, you got to know the difference between good advice and bad advice. That is crucial to what it is you're doing. If you're a trader, you should set up an LLC for your brokerage account, protect it from the myriad of threats that are out there, and then look to create a business around that so that you can reduce your taxes to the greatest extent as possible. It's when you discover this and you start seeing how these two entities work together, then you're going to realize the benefits that are available. Now, one of the things that Don was talking about is that this can get complicated. I understand that. We talked about, when I was talking about the LLC, setting that up in a charging order protected jurisdiction. For some of you, that's probably the first time you've heard of that. Well, there are states out there like Nevada, Wyoming, Delaware, Texas, that have great charging order protection. And there's other states such as California, Oregon, Washington, that are not as strong. Some of them are just downright scary. South Carolina, we can just take your LLC from you. So even if you put protection in place, you find out when you're involved in a lawsuit that it's not going to be there to protect you. So one of the things that I encourage everyone on this webinar to do is seriously consider coming to our 2-day or 3-day event that Don was talking about. We offer you 2 free tickets. It's a $995 value to attend what is the longest running wealth protection event in the country right now. And at this event, I just want to share with you some of the secrets that you're going to discover when you come to this next 3-day event that we have. For example, we're going to show you how, on average, our clients legally save over $12,000 a year in income taxes compared to what they used to overpay. There are ways in which you can create that corporation and things you can deduct through there, such as medical expenses as well. You can fund a retirement plan, which becomes deductible. So as you're trading through that account and you're generating more income, you start siphoning more of it off into the corporation. And rather than having it be taxable to you, we pay it out to you in reimbursable expenses, or we find ways to get it out that are non-taxable. We'll show you strategies, how you can pull up to $10,000, $15,000, $20,000 a year out of your account completely tax-free. That's money you can put in your pocket. We'll show you how to make your personal assets or make you what I call invisible to anyone trying to take your wealth from you. So here's something with my brokerage account. What I don't want to do is have any creditor be able to jump onto the internet and find out what I own. So many people create business entities in a way in which it's too easy for a creditor to find them. I just got an email today from an individual that was lamenting about the fact that they couldn't figure out who was the owner of an LLC that we created. Well, that's intentional. We do not want our creditors or people that are on fishing expeditions knowing what we own or easily jumping on the internet and discovering this information. Because I often like to say, you cannot sue what you cannot see. We'll teach you this, the 11 biggest legal and tax mistakes real estate investors make when buying, selling, or leasing properties and how to avoid them. So this is an issue. If you're thinking about not only trading, but you want to get involved in real estate, we're going to show you how to protect that as well. We'll show you what most attorneys and CPAs get wrong about investors' legal risks and how to build a force field around your personal wealth. Because when it comes to asset protection planning, a lot of people do not understand what are the appropriate types of entities to use for their investing. Take your personal residence, for instance. Most attorneys will tell you, buy insurance, or maybe you have your homestead exemption. Well, I'm going to show you a strategy where you can make your personal residence so unattractive, no one would even consider going after that asset. Or more importantly, I'll show you how to take your personal residence and put it in a position where if somebody did sue you, they couldn't attach your house. Because for most of us, that is where we have a lot of wealth that we've accumulated in the equity in our property. And it's also the lowest hanging fruit on your tree that an attorney is going to want to go after in a lawsuit. We'll show you how to turbocharge your investing profits using methods no one's ever told you, especially your CPA. I've shared with you a few of these tonight on this webinar about using that corporation. We'll show you how you can incorporate that corporation into your life as well when you're doing other forms of business. So you can, again, start taking money out of your personal bracket and start putting into the C corporation's tax bracket, which is much lower than your individual bracket with the new tax law changes. And we'll go really deep into that. Scott Estel, who talks about taxation, will be there, and he's going to be on another webinar here, I believe, next week, that you definitely do not want to miss, because there's so many ways. When I talk about $12,000 we can put back in your pocket, that's on average what we save people. We'll show you how to structure your deal so you can save huge money in taxes, placing a legal fortress around your wealth. So when you're structuring your business going forwards, for many of you on here probably have businesses, or if you have real estate, how to structure that so that when you're making offers or when you're putting these deals together, you're not risking what it is you have. We'll show you how to reduce your legal exposure to virtually zero. So many of us have assets, just beyond our trading account. As I talked about, you have your savings account. You maybe have rental real estate. You have your personal residence. You have your retirement accounts. Well, retirement accounts, we think they're protected. That's not necessarily true. Many people are unaware of the fact that the IRAs that you have, they're not protected in certain states. And so if you got sued, someone could go after and take your IRA from you. We'll show you how to fix that potential problem so that your IRAs are now protected from creditors. More importantly, if you're a trader, I'll show you a strategy where you can take an IRA, because right now, a lot of times with traders, you have a hard time trading on margin or being able to use those funds in a way that you want inside of an individual retirement account. Well, I'll show you a strategy where if you just change the type of account that you're utilizing, you can now start trading on margin if you wanted to do that with your IRA funds. It's a strategy that a lot of financial planners are unaware of. They don't know about it because it is somewhat it's a little complicated to set up. But once it's set up, we have trading clients that really opened up their returns on them now because they're no longer stuck and just trading a certain way through their retirement accounts. We'll show you mistakes that you're making now and how you can put an end to them. So if you're a current investor, some of the things we'll be talking about is trading at the event. So Mike Koval will be there teaching you trading strategies and mistakes that you may have made this year with your trading and how to fix them. And then we're going to come in and we're going to show you on the tax side and the asset protection side how to protect that as well. I'm going to guide you through how to create a ultimate estate plan. This is really important. For what it is you're doing, you want to make sure if something were to happen to you and your spouse, you want to make sure that that wealth is going to be there. One of the issues that we see a lot is that people who are not protected and do not think about this the right way, your brokerage account, for instance, you've got this trading account set up. If something were to happen to you, who's in charge of it? Who's going to be able to take over that account and trade it? Well, if you have a well-designed estate plan in place, then that plan will lay out who's going to have access to that account and who can control it, maybe close it out of positions that you're in when you had an untimely passing. So we're going to go into that in detail, that by setting up the right plan, you'll be able to protect wealth for multiple generations. But more importantly, at the workshop, you're going to leave with a blueprint on how to save thousands in taxes and make sure that your assets are bulletproof from, frivolous lawsuits that are going to come up. So you're going to be able to sit down with my team of strategists, and we're going to show you, if you're a trader, as we've been talking about tonight, how to put that corporation, that LLC into play and how to move the money out, the types of management agreements we need between them to give you tax-free access to those funds that you're currently generating from your brokerage account. More importantly, how that will all tie into an estate plan. And if you have IRAs, how we can bring those into play. And there's things you can do with them. I can show you how to joint venture with your retirement account. So if you want to trade in a way or use those funds in an account where you can generate even more money, we'll show you how to do JVs with your own funds. And we're going to teach you so much more at this event. So if you're considering attending the event, I would highly encourage you to do so. To register, you would want to go to protectwealth.com. As Don stated, the next event is September 12th through the 14th. It's in Arlington, Texas. At this event, we're going to show you how to make your assets untouchable and save thousands in taxes. So I would highly encourage you to get to that event. I've been teaching there for the last 4 years, and the people that come to that event definitely walk out of there with a plan in place, with that blueprint, so they know where to go. If you don't have time to make it to the event, maybe you've got your sister's wedding, which, saving taxes or protecting your assets or going to your sister's wedding, I don't know, maybe ask her to film it, come to the event. But if you can't get out of it because it's your sister-in-law and your spouse won't let you, then by all means, why don't you schedule a strategy session with us? If you go to protectwealth.com/consult, you can get a free strategy session Whereas a trader, we can walk you through these trading strategies, look at your individual situation, and create a plan that will help protect you and cover many of the aspects that I went through, so you won't risk losing that that brokerage account that you're working on building up, and you're going to be making sure that you're saving gobs and taxes and not overpaying. So trading is a business. It's an important aspect. If you're a trader, you want to make sure you're putting together the right entities in place. They work in conjunction with one another, and it's going to open up additional opportunities for you. This is what I tell investors all the time. You know, people say, well, how did they get to where they're at? How did they get there so quickly? Well, it's because they're using the tax code. They're using business entities to help move their plan or their investing along. You don't have to get any better at trading. All you have to do is get in better with your business planning to find additional benefits. And that's what we can do for you by having the right structure in place. So with that, Kendall, if we want to take some questions, if anybody has anything about using a corporation or an LLC, I'd be happy to do that.
Well, I just got to say, one of the best things we find at our summits is, well, of course, Clint, you're there. So that's tremendous. And you have a team there. So that's obviously something I highly, highly recommend. If you can make it, come to the summit. You can meet with Clint and his team. But we find very frequently the people that have the most success as an investor, real estate, stock, or what have you, they basically, you said it exactly right, Clint. They find ways at saving money on taxes better than the average individual. And therefore, they have more to invest and can make more and grow their wealth. Pretty amazing. Great, Clint. Thank you so much for your time. I really do appreciate it. Okay, looks like we do have one question. Can you see B. Simley's question there, Clint?
Which one is that?
Let's see. Oops, there we go. I'll read it to you. It's B. Steinley. A C Corp is managing an LLC, and it's a brokerage account in the name of the LLC. The LLC had 100,000 net gain in 2018 from trading equities. The C Corp has lost carry forwards into 2018 of 500,000. Can a loss carry forwards be used in this case to offset the $100,000 gain from trading? And if so, how has that played out?
Well, so with the trading account there, what we're going to do is you're going to be expensing out a certain portion up to the corporation. So your entire brokerage account gain in the LLC strategy that I laid out for you, it's not all that income's not going to flow into the corporation. A portion of it is. And so that can be used to offset losses. Now, on the other hand, if you wanted to trade full time in your corporation, it used to be under the prior tax law that you would be in a higher tax bracket to try to trade in a company, but you can qualify your corporation as a trader, then you would be able to take that income and use it to offset other expenses. So when we're looking at a trader and creating a business, for most people, it's going to be a C Corp with an LLC. For some individuals, it may be just one entity, just a C corporation, depending on their activity level. Where does that rise to? So if you wanted to go with one entity, then what we're going to ask you is, how often are you trading? Are you taking advantage of short-term market swings with your trading, or is it more of an investor strategy? And so that's important that we strategize with when we're developing the plan.
Great. Okay. Mary asks, can a mother and daughter having separate businesses place them in one LLC or corporation?
You can have multiple business in that corporation. So this is what a lot of people will do. They'll set up a C corporation. They'll use it to manage their brokerage account to generate income. And then they'll decide, hey, I want to run another type of business through this corporation. Well, there's nothing to stop you from running multiple businesses through one company. But if you want to bring in your daughter, then I would ask you, do you want to keep that a strong mother-daughter relationship? Because many times what does happen in business, unfortunately, is it can tear families apart. Yesterday, I was talking to a client. His brother bought his business from him it was 5 years ago for $1.7 million. And he paid him $1 million of the 1.7 and refuses to pay him anymore. He says, your business was not worth it. I paid you all your business is worth. Well, the brother kind of ran the business into the ground a bit, and he doesn't have the income right now to make that extra payment, but it's driven a wedge between their family. So if you and your daughter are in alignment, great, you can do it. But oftentimes I would tell people to separate out the activities, especially if you find yourself going different ways. Because when you have a corporation and you're working with someone else, you may have certain expenses you want to take, and the other individual may not be interested in taking those types of expenses. So that sometimes becomes an issue. For example, maybe one of you likes to shop a little more and you want to run the expenses through the corporation, but the other one sees that as a frivolous expense. And so then you have to account for that some way through the income. So you can start out that way, but you may want to change as you go forwards and your business starts to grow.
Great. And one question we see a lot, Clint, too, you touched on this a little bit, was, a lot of your qualified retirement IRAs, SEP IRAs, 401ks that are used for investing in the stock market, whatever. So a lot of times people think they're totally 100% protected, but they're not. That's not true, correct?
That's correct. And that's, we break that down. I don't have a list of them handy right now, but I will at the event. We'll go through that. The IRAs are covered under state law. So a lot of individuals that I work with have accumulated sizable retirement accounts that they're trading inside of their IRA, and they're not aware of the fact that IRA, if they were involved in a lawsuit, just, I gave you 4 examples of how lawsuits can happen, and there's hundreds of them. That IRA could be taken from them. So you want to make sure that IRA is put into a qualified retirement plan, not held as an IRA, to pick up the protections under ERISA. So you can continue to trade. In fact, you can do more with your trading. Heck, we'll even show you a way where you can take money tax-free out of your IRA and use it to seed a trading account on the outside. So, the problem with trading inside of an IRA is that all that money stays in that tax-deferred environment. But if you want income today, why not gain access to those funds tax-free and put them to work for you, and then you can generate that income and use it for today's living expenses.
Awesome. Your team's actually helped us. We do asset protection. We learn a lot of these strategies, but over the years, Clint and his team has helped us as well. They've been working with us for a couple of years. And so Don and myself, we've done several investments, real estate and stock and otherwise, that we wouldn't have done. We've got some great tax strategies. We feel much better protected, and that does sometimes mean going to different states and doing different strategies you never would have thought of. So it helps to know. All right, Daniel, can you please explain in more detail the medical expense reimbursement of a C corporation?
Yeah, so with the C corporation, what we're looking to do is reimburse you for any out-of-pocket expenses. It's one of the aspects of C corporations that is extremely attractive to people. If you think that you're going to have high medical expenses, then rather than be stuck in a situation, I was just talking to someone last week. They have over $200,000 in medical expenses out of pocket that their insurance did not cover. They had some serious issues that they made it through, but then the question became, how are we going to pay for these? So to make sure they're 100% deductible, what we showed them is through a strategy of having their C corporation generating money from their investment accounts, investment assets. That money can then be paid out to them tax-free to reimburse them for their medical expenses that they have going forwards. So this is available to C corporations. It's the one entity. It's the one and only entity that you can take this deduction through. So it's any out-of-pocket expenses that you have that's not covered by insurance you can write off.
Awesome. Clint, thank you so much. Again, if you're interested in coming to the Asset Protection Summit, Clint and his team will be there. This will be in Dallas, September 12th, 13th, and 14th. You can register at protectwealth.com. If you cannot make the event, like you say, Clint, do anything you can to get there. We'd love to have you. There's some great benefits to coming tax and asset protection strategies. If you can't make it, though, go ahead and schedule a session with Clint and his team at protectwealth.com/consult. That's there on your screen. You can also click in the chat screen session. All right, Clint, do you have a question? Time for one last question?
Sure.
All right. Adyssa is asking, I'm confused with your asset protection. The holding company owns the LLCs. If the holding company owns the LLCs, And if someone sues the holding company, how safe are the LLCs under the LLC?
Great question. So with the LLC itself is not going to be sued because the LLC does not hold dangerous assets. It's holding safe assets. So the whole premise here is that we want to make sure that our brokerage account, our cash, savings, our investments are put beyond the reach of our personal creditors. It's not like real estate. Real estate has liability. So you put a house inside of an LLC and a tenant slips and falls, or they have a toxic mold claim, they're going to sue the LLC and you're protected from that. When I'm dealing with what I call safe assets, investments, equities, things of that nature, my risk does not come from the equities creating a lawsuit. It's coming from the things that I do in my everyday life that's going to land me in a lawsuit. So if your kids go out there and they're driving the car and they're involved in an accident, then you want to make sure that brokerage account is protected. The LLC offers that protection. It keeps the creditors from gaining access to your funds. I've seen cases before where individuals are involved in lawsuits and the actual attorney on the other side moves for what is called a prejudgment writ of attachment to tie up their funds ahead of time. And they do it under the guise that they're afraid that the client is going to try to move the assets into a state where they can't reach them. And when I say state, I mean in a protected state. So you can't wait to create protection. After the bell has been rung, there's no unringing it. And so when people come to us and they say, oh, I'm involved in a lawsuit, or this happened, I think I'm about to be sued, then we cannot put these structures in place. They have to be in place before the accident or the harm occurs in order for you to get the protection.
Great. That's a great question. Great answer, Clint. Thank you so much. We really do appreciate it. As always, Clint, really incredible. I really do appreciate learning from you. I know our students do. Always incredible information, asset protection, tax strategies. Really, it's unparalleled. Clint's had a lot of experience. We really do enjoy having them at the summits with us. So if you can make it, we'd love to have you, everyone there here on the call. If you can make it to Dallas, September 12th through 14th, love to have you. Please give us a call, register online. Clint, we appreciate it. Thanks again for your expertise.
Hey, right on. It's been great. I hope to see you guys come out to the 3-day event. It'll be great chatting with you. If you can't, make sure you sign up for a strategy session. We'll go through your individual situation with you and make some recommendations on what you could do to improve your tax structure, make sure your assets are protected from aggressive creditors, and also make sure that we're looking at it from a business standpoint.
Clint, thanks again so much. Everyone, thank you as well for being on the call. We really enjoy having you. We look forward to seeing you so soon. If you need anything else, please give us a call, protectwealth.com. Thanks, everyone. Have a great night.